What's up? What's up? What's up? Long time no see. How y'all doing? How y'all doing? Welcome to the Ironworth Trading Show. I am your host, Coach Price. This is not financial advice. This is for educational purposes only. All right? I'm not your financial advisor, but I'm here to educate you, okay? So I just wanted to talk about this PCE inflation that's going on Friday. This is like one of the biggest indicators that we got this week right now. I'm also going to go through a few trades that I'm going to execute this week. All right, so yeah, the Iran deal that's opening up the oil markets is going on right now. SpaceX is raising $20 billion in debt. We got Microsoft going all in on AI. Yeah, I want to talk about it. So swing trading is how we're going to benefit from any of this. I want to talk to y'all about swing trading because I know a lot of people are stuck on day trading. You know, a lot of people just think, they want to get in and get out because those are cheaper. The 0 days to expire options are cheaper, so people like to go that way. But I'm going to show you how you profit from holding those positions for 3 to 21 days, sometimes 3 to 6 months. Okay, and if you're dealing with a leap, it may be even over a year, but you'll be able to capture real moves. Right, you're looking at 10 to 15, maybe even 30 to 40%, maybe even more. There's no limit to this. But we're not gambling. I want to show y'all the setup and why it matters. So swing trading sits between day trading and investing, right? We know that day trading is buying and selling it the same day. These people are literally, most of the time, they glued to their computer. They fighting an algorithm or a robot. A lot of people lose money day trading, okay? Investing is buying and holding for years. So if you didn't know the difference between investing and trading, investing is buying and holding, and whereas trading would be dealing with stock options, you usually in and out faster than you would be as an investor. An investor doesn't want to deal with the taxes as much, so they're willing to hold it for over a year, okay? Let's be clear. Now, if you're a trader, you holding it for less than a year. That's how I like to look at it. But when you on the swing trade side, you staying in it long enough to catch a real move, okay? And it's short enough to manage the risk. And you get to enter with a plan when you swing trading. You set your stop loss. You take profits. You can do the same thing on the day trading side, but the speed needs to be there for the day trading. All right, now, there's 3 reasons that this works. Number 1, you don't live on your computer. A lot of people want to quit their day job and become traders, right? And they don't understand that. They ask you, hey, are you a full-time trader? I'm not sitting in front of this fucking computer for hours. No, that's not going to happen. We're not doing that, right? You check once a day, that's it. And that's why I like swing trading. And the moves are real. You don't have all these false signals. Right? I ain't talking about a 2% move. I'm talking about a 15% move. That's why I like swing trading. And also you get to ride the trend when you swing trading. You don't fight the trend. It's much easier to go with the flow when you are swing trading, so you can ultimately be more profitable. This is a sweet spot for making money if you have a real job. A lot of people work. You ain't got time to be no damn day trader. But guess what? You got plenty of time to swing trade. Okay, you got plenty of time to swing trade. So let's get off into it. I want to talk to y'all about it real quick. This Friday we have a PCE report dropping. PCE, ladies and gentlemen, stands for personal consumption expenditures. It's a fancy name for some simple shit. They just trying to figure out, are the prices going up? Are the prices going up right now? Are we dealing with inflation? That's what they want to know. All right, let me see where we at. Here we go. Yeah, so I gotta block somebody. Oh yeah, y'all do me a solid. If you are new here, hit the follow button. Tap the screen, y'all. Tapping is clapping. I need y'all to tap the screen. That shows the algorithm that, people like this video. Share the live out. If you're watching on YouTube, do me a solid and like and subscribe. Thank you. I appreciate it. Now, good looking out, Life Comfy. I appreciate you. So yeah, y'all do me a solid. Share the live. Tap the screen. It helps. Now, this PCE report that's coming out on Friday, this is a very big indicator. You can make a shit ton of money if you pay attention. All right. Some of us don't even have a clue what the PCE is, but we call ourselves traders and we don't care about a lot of shit like that ultimately affects your portfolio. It affects your day-to-day life too. See, this is how this works. When the prices rise, the Feds raises interest rates. Did y'all know that? Why? Why do they do this? Does anybody know why does this happen? Because if borrowing gets expensive, people buy less. Less buying means less inflation. But here's what happened when inflation is high and the Feds is fighting it. Volatility spikes. Nobody knows what's coming. You know, will the rates go higher? Will inflation cool down? And that type of uncertainty creates very big price swings. That is your opportunity, ladies and gentlemen. That is where the money is made. That's why we're talking about swing trading today. So Friday morning, the PCE hits. And if the inflation comes in hot, and that will be above 3.5, so I want y'all to pay attention and see what it's going to be. You can expect the stocks to sell off hard. Can anybody in the chat tell me how to make money if the stocks sell off hard? What do you do how do you benefit from the stocks selling off hard? Does anybody in the chat know? Where my experts at? When the stocks sell off hard, you short the market, or you buy puts, okay? Or you sell covered calls. There's multiple ways, but my point is you're shorting this shit. That's if it comes in hot. You understand? Remember, hot inflation is above 3.5. You can expect the stocks to sell off hard. What's up, Miss L? Long time no see. So you can look at 1 to 2% intraday moves. Cool. What do I mean by intraday moves? I'm saying, like, if you a day trader, yeah, you might make one. You can look for 1 to 2% move easy, right? Easy. If it's cool though, like the inflation, if the inflation cool off, like if it's below 3.2, you can expect a rally. You can expect this shit to go up, right? Now that volatility is cha-ching, ladies and gentlemen. Cha-ching. It's money. You don't know the direction, but you know the direction doesn't matter. The move matters, okay? The move matters, all right? I ain't gonna talk y'all head off. We're gonna talk about this PCE for a reason. I just want y'all to understand where I'm coming from. So right now we at 3.8. The target is 2%. We are high as fuck. This matters because your savings account lose purchasing power. Everybody in the chat, some of y'all save your money in shoe boxes and you know, in the wall and all this extra shit, right? But if you have your money in a savings account, you need to know that your saving account is losing purchasing power, right? Because of inflation. So the interest rates stay elevated, the stock market stays volatile, and as a swing trader, right, that last thing I just mentioned is gold. That's where we make our money at, okay? We want this shit to be volatile, all right? All right, y'all with me? Now I'm gonna explain this to y'all real quick. 3 things happens when inflation happens, right? Your money gets weaker from inflation. Let's talk about it. The rates stay high, so the stocks fall. But volatility spikes, which is where you make money. Anybody in the chat still confused about volatility? Say, Coach, what is volatility? If y'all still confused about volatility, let me know right now. I'll break it down. You're not going to leave this live stream confused about volatility. By the way, how y'all doing? Y'all having a good day? I missed y'all. All my YouTube people, I'm streaming on TikTok at the same time. If y'all wondering who I'm talking to. Bro, what's up? How y'all doing? Talk to me. This ain't one of them live streams where I'm just gonna run my mouth, y'all. Talk to me. How y'all doing? On this lovely evening. This lovely summer evening. So I got my show up. I'm good. I gotta let TikTok see me, because if not, they be trying to end everything I got going on. I'm good, TikTok. They see me. We good. My camera's not off. But what I was saying though, I'm excellent, Monique. I wanted y'all to see that this PCE that's about to come out Friday is a big indicator, and you can make a lot of money if you pay attention to it. And I'm bringing that up because I want people to know the difference between day trading money and swing trading money. You see what I'm saying? Day trading money is different from the swing trading money. What do y'all do? Do y'all day trade or swing trade or both? It's Friday at 8:30 a.m. When that report drop, you don't got to do anything necessarily at that moment. The market gonna open at 9:30, okay? And this was gonna happen. By 10 a.m., a lot of traders would have pushed the stocks in one direction. If the inflation is hot, the stocks is gonna be down 1.2, 1 or 2%, not 1.2, 1 or 2%. You want to wait for the bounce. Let's say the stock sold off hard though. Like let's say SPY dropped down, and then it's starting to bounce. That bounce will be the signal. So I don't care if you selling a put spread. No matter however you want to do it, you're gonna collect your money. You're gonna have a certain maximum loss. Let's say the stock sold off hard and it's down. Let's say you do a put spread, or you sell a put, right? That's where you would sell a put and buy a put. That's a spread. I know a lot of y'all be like, man, what the hell you talking about? You can buy a call if you think the price is going up on a stock. You can buy a put if you think the price is going down. But you can also sell a call. You can also sell a put, ladies and gentlemen. Okay? And I know it sounds crazy, because when you buy in a call, you think the price is going up. But when you selling a call, you think the price is going down. And you want to sell a call to the idiot that think the price is going up. Make sense? Y'all let me know if that made sense in the chat. Same way with a put. If you think the price going down, you buy a put, right? But if you think the price when you think the price going up, you can sell a put to the people that are buying puts. You think the price going up. And I like buying calls, but selling calls is better. I like buying puts, but to me, selling puts is better. You know why? Because you're dealing with ownership. You have to own 100 shares to be able to sell a contract, to be able to do a covered call. You need at least 100 shares, right? And then in order for you to sell a put, you got to have enough money in that account to be able to purchase 100 shares at a time of that company. Because the worst thing that happens is you get to buy 100 shares of your favorite stock. The only time I'm about to sell a put is if I am wanting to get a discount on that stock, or I want to get paid waiting to buy it at a lower price. Same thing with a call. If I want to sell a call, it's only going to be with a stock that I'm looking to sell anyways. Pretend you bought a stock at $5, right? And you bought hundreds of shares. The shit then went up to $30, but you don't think it's going to go any higher. You're actually ready to sell, right? So people think it's going to go up, woo after bam. So you sell some calls, and what happens is you either make money and you still got them, or you end up selling the shares that you wanted to sell anyways. It's a win-win situation. All right. Now back to what I was talking about. When you hold a position for 5 to 7 days, and the stocks either rally back or fall through, either way you in and out. If the stocks bounce, then that put spread we was talking about, it'll expire worthless, you know. But if the stock keep falling and it hit your stop loss, you take the little loss and you move on. That's the discipline. But my point is, we don't predict the market. We trade the bounce. We're going to define our risk up front, and then we're going to take the money, get the money off the table, take profit, okay? Don't please, y'all, stop forgetting to take profit. Stop forgetting to take profit. I just talked to my cousin. Cuz, I ain't trying to put you on blast if you watching. Cuz got a problem with taking profit. Get that money off the table. What is y'all doing? If you got one contract, then that means you can only take profit one time, right? Okay, cool. So what you doing? Looking at it, waiting on it to give you more? Let me ask y'all a question. Do you have a set of rules? Do you have a specific number that if it gives you this much in profit, I'm taking profit at this level? And if I lose this amount of money, I'm getting out. Y'all let me know in the chat right now. What is your risk to reward ratio? What's your rules? Tell me your rules. I'll wait. You gotta have a number. You gotta say, look, every time this shit I'm taking profit at 10%. You know what that does? That eliminates the problem. Like, I'm taking profit at 5%, then I'm taking profit at 10%. Hell, I'm taking profit. Some people take profit at 2%. But to leave the money on the table is absurd, right? Would y'all do that in real life? Would you leave some money on the table? You put $200 on the table and it turned into 600. You gonna sit there and look at it and say, well, I just want it to turn into 1,000. No, get the money off the table, okay? That's what trading is like. And then I had somebody else tell me today, oh, well, all these contracts are expensive. There are contracts, and it's about consistency. Let me show y'all what I mean, right? I'm gonna show you a cheap contract, a cheap swing trade, okay? Let me see. Here's a cheap swing trade right here. I don't know if y'all can see it. So look, check this out. So see at the top where it says SPY. That is a ETF, and it tracks the S&P 500 index. Okay, I know those are big words, so let me break it down. SPY is basically a folder of 500 of the best companies in the United States. That's it. So let's not make that complicated. That's what SPY is. You trade SPY, you pretty much trading the whole market at one time. And at the moment, SPY was trading at $743. Okay, and when you see at the top where it says SPY 753, that's you saying, I think SPY is going to go to $753 or more. Okay, because this is a call, meaning that you think the price is going up from 743 to 753. 753 is the strike price. And now my people on YouTube probably wondering, what the hell are you talking about? Because look, I'm streaming live on YouTube as well. All right, but my point is, you can buy contracts that don't cost much. The average price on one of these contracts was $1.15 per share, aka $115, because in one contract it's 100 shares. So instead of you paying $743 100 times, you're only paying $1.15 100 times. So it'll be $115 for one contract. There's two contracts there. They are, and so that contract that you bought for $115 grew and is worth $140. But you bought it and you can close it the same day, even though it doesn't expire today, June 22nd, the day that it was purchased. It expires June 26th, which qualifies this to be a swing trade because it did not get closed. We did not close this trade because I wanted to show y'all what a swing trade is and how cheap the options can be if you are 3-4 days out. That's what, 3 days away, 3 to 4 days away. Some, when you do, now the further out you go with that expiration date, the more expensive they become. Okay, you looking at the delta where it says 0.19. That's how much it grows in value every time SPY goes up $1, or it loses that much every time SPY goes down $1. And you always want to pay attention to the theta. That time decay. You don't have much time to hold shit for real. Okay? Now I'm going to get back to the regularly scheduled program. I don't want to get too far off. Where was I at? We're going to talk about this Iran situation real quick because this is also going to pump the market. After 18 hours of negotiations, Iran and the United States reached an agreement. They reached an agreement. At least that's what they say. They didn't say this shit 20 times already. But what does it mean? It means that Iran can export oil again. We could think of it this way. More oil on the market. That's what this means. When the supply goes up, what happens, y'all? Y'all know supply and demand 101. When the supply goes up, the prices go down. When the oil prices go down, the oil companies make less money. Their stock prices fall. But the airlines, okay, the shipping companies, the consumer companies, they pay less for fuel their cost goes up. Not cost, they profit go up. They cost drop, their profits expand. That's what I meant to say. They making more money because they don't have to pay as much. You see what I'm saying? So their stocks are going to rise. This is where we come in as swing traders. The energy stocks start falling over 3 to 4 days as the other traders start to realize what this means. By the time day 4 to 5 roll around, the worst news is priced in and the support is found. The support is the floor, y'all, if y'all didn't know. You know, support and resistance. We want the stock prices go up and down and up and down. They hit a floor, they hit a ceiling, they hit a floor, they hit a ceiling. When it hit the floor and it hit the ceiling 3-4 times, like, come on now. You should know what it's going to do after it hits the floor. It's going back to the ceiling. And if it hit the ceiling and it fails to break through the ceiling, it's going back to the floor. This is simple. This is simple. So what we're looking for is that support level. That's when you're gonna enter. We got Chevron. Let's see where Chevron trading at. Let me look this up real quick. Chevron trading at $175 right now. Okay. Now there's multiple ways to benefit from this to where you can make money from it. Okay. But I'm not here to tell y'all what to do. I'm just here to point you in the right direction. You know what I'm saying? You want to pay attention to Chevron this week. Like there's some shit popping off. Let me see if I got. Let me just explain this to y'all real quick between Chevron and what they got cooking, cause I smell it. You see what I'm saying? Loving this info. Really quick. Do you use the Webull app? Yes, I do. Yes, I do, Shay. Yes, I do. Matter of fact, I'm really jumping the gun. Let's talk about SpaceX. Did y'all get anybody in the chat bought SpaceX? Or are y'all trading SpaceX stock options? Anybody in the chat trade SpaceX stock options? As y'all know, they went public this month. We all witnessed history. They shit went from like 135 to like 165 quick, big pop. And they announced that they raising $20 billion in bonds. Yup, a few shares for some sizzle. I know that's right. So the stock fell 6% here recently because they're doing the bonds though. You know what I'm saying? A lot of traders freak out when they see this, like, oh, like they desperate, they need money. Wrong. That's not how this shit work. I want y'all to think like an expert when it comes to this. Elon just cashed in a massive IPO. Think about it, right? He cashed in a big ass IPO, but Starship development is expensive. You see what I'm saying? It costs a lot of money to do what he's trying to do. He got to launch a lot of facilities that are expensive. He got to launch facilities that are expensive. Gang, I bought 2 shares at 155. It's now at 153. Okay, Billy, that's what we're here to talk about. All right, that's what we're here to talk about. It could fall another 5 to 10% before it bounces again, Billy. How much stamina do you got? You understand me? This ain't financial advice. I'm just letting you know why this is happening. They just announced that they raising $20 billion in bonds. But the IPO, people, it's a lot of uncertainty around this shit. Investors don't necessarily trust the valuations that's out on SpaceX, but they also don't understand the fucking company. They don't understand the company. So whenever the management announces that they raising a bunch of debt, that they about to go into a lot of debt, it triggers a lot of panic and people sell. That's why you bought at 155, Billy, and it's at 153 now. You feel me? Because a lot of people selling. But hear me out. This is where you either got diamond hands or paper hands, buddy. This is going to create volatility, Billy. I ain't just talking to you, Billy. I'm just talking shit. But yeah, this is going to create volatility. And listen, volatility is our playground. How many people still confused about volatility? Let me know. Because that's why we talking about swing trading. Shit, you got plenty of time to get out the way. Swing trading is like, Okay, day trading is like crossing the street and a car right there on your ass about to hit you if you don't hurry up and get across the street, right? And getting across the street will be taking profit. And getting hit will be your stop loss getting hit real quick, right? You're going to get hit real quick. Cool. You went the wrong way. You got hit. Cool. Swing trading, you can see that fucking car from a mile away. Are we clear? Huh? You can get out the way early. Sure, you're about to get hit. You went the wrong way, but you see the shit coming. You feel me? Does that make sense? Okay, cool. Shay said it makes sense. That's all I need. And I need to see that it makes sense to my people. That's really all I'm looking for. I don't gotta hear everybody say it makes sense. But yeah. Alright, so we're gonna look at it this way. SpaceX is where it's at. Cool. It could fall another 5 to 10%. I want y'all to understand that me personally, I'm not gonna buy the stock right about now. It's too risky with this volatility. Instead, I'm using the spread. Instead, I use the spread. If y'all confused about the spread, listen. You think it's going to fall more, you sell a put spread. You sell a put spread. You pick one strike price on the put side. You buy a different strike price on the other on the put side. So you selling a put and you buying a put at the same time. You collect some money up front. You feel me? Now you can lose a certain amount. You hold the shit for a few days. The stock falls. Your spread hits max profit. You close it. You keep the money. Another way you could look at it. After people start panicking and shit, the stock could drop and then bounce. Now you bullish when it started to bounce. Pay attention. So you could buy a call or you could sell a call spread. You sell a call strike price, then you buy a call strike price. You collect the money. Like there's different ways to come at this. How long before it goes up, you think? Good question. I think it don't matter what I think, Charles Wallace. I think we should pay attention to what it do, buddy. That's the most safest answer I can give you, honestly. Because I don't know. The truth is, I don't know. But how long I think? I don't know. It could be a week. It could be a week, a month, Nobody knows. There is no predicting. Hell no, I ain't got no crystal ball. I ain't got no crystal ball. But my point is, we gonna make money if it's going down. We gonna make money if it's going up. Can I get the W's in the chat? Somebody says difference between buying a call and selling a call. Buying a put and selling a put. Thanks. I got you, Rich Van Gogh. You kind of came in kind of late. I just explained it, but I'll explain it again for you, my brother. I got you. So, for the people that already know, they probably sighing like a motherfucker. They like, oh my God, here you go again. So buying a call, you think the price is going up on that stock. Buying a put, you think it's going down, okay? When you sell a call, however, you own 100 shares already, okay? Because one contract is equal to 100 shares. So when you buy a call, you're buying one contract, which is equal to 100 shares. You're essentially borrowing 100 shares from somebody, okay? And giving them back at pretty much they get them back. Or you can exercise the contract. You get to buy those shares from that person at the price that you agreed upon. I'm trying to keep this simple. So when you selling the call, you already own 100 shares of that stock, and you just loaning them out and you collecting the money up front. And if all goes wrong, you end up selling those shares. But remember, I told you I will only do a cover call on a stock that I was already going to sell. It's a win-win situation. I bought this shit when it was $2. It's at $200. I don't give a fuck. That type of energy. Like you already made money. You don't care. You're ready to sell it. That's the type of that's when you would do a cover call, I think, in my opinion, right? Now, buying a put, you think the price going down. Selling a put, you think the price is going up, right? You have enough money in that account to buy 100 shares of that stock. That's when you should do a put, a secured put is what it's called. P, what's happening? So if I got enough money, so you should only do a secure put when you are wanting to buy that stock at a discounted price, and you're gonna get paid to wait. So the worst case that happens there, the stock goes to the price that you agreed upon, and you gotta buy that shit. But you was willing to buy it, you wanted to buy it. SpaceX a new meme coin? No, this is an actual company that hit the market. Is you can go buy pieces of it. Somebody says just sell cash secure put. You see, Big Buck Wall Street lets you know. But my point is though, y'all, like you can make money on the downside. You gonna make money on the upside. We don't care about the direction. We gonna make money either way it go. We gonna capture both moves. This is real swing trading. I know, bro. Sure, it is overhyped. Yeah, it is overhyped. But yeah, volatility in swing trading equals opportunity, and you can use spreads to define your risk. Meaning, you're not finna take a big L. Okay. You're not finna take a big loss. At least that's not what we teaching over here. But you're gonna take. I really want to teach y'all to take profits incrementally, basically piece by piece. And y'all don't gotta take profit. Okay, TikTok, calm down. Y'all don't gotta take profit, all at one time. Okay. If you get one contract, yes, you have to sell that shit and you only take profit one time. But even then, you should just go ahead and take the money off the table. If your money grew, why the hell are you watching it go back down? It's just absurd to me. And I really want y'all to get with me so I can show you how to utilize bracket orders, or one cancels the other orders, the different orders that are going to help you execute, not losing a lot of money and taking profit without you having to guess or wonder, where do I get out of this trade at? I don't like that. I want y'all to understand that limit orders is your best friend. Okay? Remember, I said it. Limit order going to be a limit order your best friend. So, IPO plus them going into debt, you finna see a lot of wild ass swings, and you're going to be able to make money from either direction. Now I can talk about Microsoft and Chevron, because they got a deal cooking that I wanted to go over with y'all. Microsoft and Chevron. Now, they just signed a 20-year deal. Microsoft and Chevron, they signed a 20-year power agreement. This is where the money at, y'all. They signed a 20-year power agreement. Chevron is going to power a massive Microsoft data center in West Texas. Okay? Why AI? AI models, Chat GPT, we know that they consume a shit ton of electricity, right? Microsoft is betting billions on AI. They are committing to a 20-year power deal. This is not me guessing. This is not my opinion. This is not speculation, ladies and gentlemen. That is commitment. That is commitment like a motherfucker. 20-year power deal. That's what we talking about. Now, what does this signal? Why do I care about this? Because Microsoft believes that AI is the future. They are willing to spend billions on infrastructure to win this race. They are locked in for 20 years. This is what this means for your money. Microsoft stock is going higher, not tomorrow, but over 6 months, maybe a year. As the AI revenue grows and the stock re-rates, you're looking at, I ain't going to say a number because I ain't going to pin. Let's just say you're looking at some growth. Amazon is on their way up too. I got that from a trusted source. That blue collar worker will put that white collar worker on all fours, says Big Buck. No doubt, I hear you. I ain't arguing that, Big Buck. Calm down. Calm down, man. Calm down. Whoa, Nelly. All right, but what I'm saying is, it's not necessarily gonna happen overnight. So, as a swing trader, I'm not buying weeklies hoping for this to pop. I'm gonna buy 6-month calls. I'm gonna buy calls that expire 6 months from now. Do y'all understand what I'm saying? You make the expiration date go further out. Microsoft is at, let's see what Microsoft is at right now. It's at 369. Microsoft is at 369. Yeah, y'all lost me for a second, but it's cool. Microsoft is at 369 right now, right? So you would look at, let's say, I'm looking at the 390 calls. I'll look at the 390 calls. What you talking about? I look at the $400 calls. I know it sounds crazy, but hey, don't doubt it. You pay a certain amount. That amount that you pay, that's how much you risking per contract. You have a target. what happens over 6 months? The first couple of weeks, the market may dip, right? You don't do shit. You hold it. This is educational. This is educational content only. I'm not telling y'all what to do. The next week or two, it might announce something that could make it bounce upwards, right? And you start making money, but you're not quite there yet. Let's wait a little bit longer. This is how swing trading is. And as after a while, the stock hits a certain level and you get close. Then when it hits your target, you sell and you made $1,000 per contract if you do it right. Yes, big buck. I agree. So why does this work? It works because you're riding a structural trend. You're giving yourself time. You're using leverage. See, the options on strong trends, that's where the big money come from. Okay? Microsoft is betting billions on AI infrastructure. So that leap or that 6-month call, that could double or triple. You see what I'm saying? Now I'm gonna share with y'all before I'm gonna go ahead and land this plane because TikTok mad that I'm not showing myself. This is gonna separate the gamblers from the real traders right here. I'm gonna help y'all out. We're gonna talk about these rules real quick. I want y'all to understand that if you only have a certain amount of money in your account, you can only risk a certain amount per trade. Do you understand? Right? You should only lose a certain amount per trade. You only have a certain amount in that account. You sister girl, you trying to flip $200. You shouldn't be using the whole $200 per trade. I've seen people do some amazing things with small accounts, I swear. But it ain't blow them in one day. Now, compound this over 100 trades and you understand the math. The second thing I want y'all to pay attention to is setting your stop loss before you enter. Even if you don't physically set it, like it ain't really set, it's just set in your head. Like a mental stop loss to where you said, if it gets here, I'm just going to get out. Make sure you do that before you get in. You don't need to guess where you're going to exit. You need to know before you get in. That's going to help you with discipline. Also, profit targets are 33% of the max. Like, I don't know how to explain this to y'all. I do know how to explain it to y'all. If I'm looking to make 10, if I'm risking $10, I need to be looking to make 30. What do I mean by risking 10? I told myself that when I get in this trade, I'm only going to lose $10 if it go the wrong way. But that means that as soon as it's at $30 profit, I need to press sell. Don't be waiting any more than that. Like, don't be greedy. Really, you could have pressed sell once it doubled. Like one to two is not bad. Now, the fourth thing I want y'all to pay attention to is pay attention to your expiration date. Don't let time decay eat away at your money. Learn theta. Don't let time decay kill your position. All right. And also, I want y'all to scale out. Start selling some of this shit as soon as you see you making money. Sell it, especially if you're buying more than one contract. Lock in the profit, ladies and gentlemen. You can leave a runner if you want to, but this is truly risk management, okay? And don't hold options through earnings or major announcements. Be careful holding them up over the weekend. See, at that point, you just started holding a lottery ticket. You are not literally trading. That's it. That's all I want y'all to pay attention to. And also position sizing. Profit target, blah, blah, blah. Y'all know the system. I say it every time I come on here. Though it's some petty rules. It's not anything hard to do at all, okay? It just takes discipline. Somebody says I bought $185,000 worth of $16 expiration. Hold on, let me read this right. $16 call. 2027 leaps. Okay, 3 years ago when Hood was at $10. Oh, big buck, I get it. So he bought a $16 call, and they expire in 2027. Okay, and he bought it 3 years ago when Hood was at $10. Damn, big buck. Hey. Slide some oil to me. Looking at. No, for real though. You good. It took me 25 seconds to find the clap button, Big Buck. But yeah, I like Robinhood, man. I think that they gonna end up going high as well too. I've been, still buying a lot of Webull for the past 2 years. Yes, Webull. I'm bullish on the company. I know it's not traditional, but whatever. I like the company. I like the platform. I like the product. And I like the stock price. It's cheap. It's under $10 now. I'm not telling nobody to buy Webull because that shit will go down on you the moment you buy it, okay? And I am not the one that told you to do shit. I ain't telling y'all to do nothing, but no, this is pretty much what I'm doing this week. I got it mapped out in my head. All right, I'm looking at Friday, the PCE report. I'm trading that. I'm looking for volatility. Like I said, if it's hot, the stocks can sell off. Might make a couple $100 that day. Trade number 2, maybe depending on y'all, how much money y'all make, you might make a couple thousand. I don't know I don't know your account portfolio. I don't know how much you got in your account. I'm just saying. Now, I'm looking at shorting the energy thing too. Like if this is really gonna be done, I think oil could go back down. Yeah. If this becomes real, I think the oil will come back down. Make some money on that day too. I'm looking at the airline calls. I want to buy calls on the airlines, Southwest, Delta. I want to hold those for about a month. I'm looking at monthly expiration dates. I'm looking at Microsoft loan calls. Let's see what else. Yeah, I'm gonna buy 6 months out on the Microsoft loan calls. MU is going crazy. Where's Webull headquarters at? It ain't here. It ain't here, Big Buck. But yeah, 4 trades. That's what I'm gonna do. That's my roadmap for the rest of this month. This week though, we're gonna watch PCE report Friday. Again, we're gonna understand that the market is vulnerable, and we are gonna prepare our entry if the volatility actually spikes. We want to look at the airlines. We want to look at Microsoft. That's it. That's it. And y'all should join my community, man. The link is in the bio. The link is in the bio. Whether you join it or not, don't let this knowledge sit, ladies and gentlemen. Use it, okay? Use it. Come back too. Hit the follow button if you're new here. I'll make sure I see y'all again. You hit the follow button. Any questions before I take off? Well, my inbox is open. If y'all need further help than what is offered, go ahead and inbox me. I got you. It's open. Send me your name and your number. I'll reach out to you. Other than that, y'all enjoy the rest of y'all night. I'll probably come back and go live again later on, depending on how I'm feeling. Y'all let me know though. If you need my help, just inbox me. Thank you for the follow, Euro Casa de Cambio. You welcome, Shay. I probably butchered the hell out of his name just then, but it's all good. Yeah, y'all go subscribe to me on YouTube too. Everybody on YouTube, I thank y'all for sitting in on the live. If you watching in, subscribe to me. If you new to YouTube or new on TikTok, y'all hit the follow button. I'd love to bump into y'all again. All right, y'all enjoy the rest of y'all day. I'm about to trade some futures now. Actually, not much though because the volatility on futures don't pop off until like 3 o'clock in the morning. I'm finna call my partner AJ and see what she doing. We finna trade futures. Might go live again later on, y'all. So I'll see y'all later.